morning and welcome to Saxo Bank Market Call. Today is October the 23rd. Yesterday was a slow day data-wise. However, Eurozone government debt to GDP ratio was out at 68.6 versus 69.0% expected. And the Eurozone budget deficit to GDP ratio was out at minus 1.5 versus minus 1.6 expected. Market developments in FX unwinding was the theme in early Europe, but recovered sharply as the correlation to intraday bullish stock markets continue. In fixed income, the bullish bias took a breather through New York as treasuries fell on stock inability to follow through from Friday's losses. Stocks, major indices in the U.S. closing in the positive territory, with Nikkei following through in the Asian session. Stocks, it was mainly tech stocks carrying the load as Apple was out with stronger than expected earnings, and in the housing sector there was rumors that Bezos could be a takeover target. In commodities, gold and silver recovering on euro-dollar finding bids. Crude oil remains range-bound after the sell-off above $90 a barrel. What's going on? Dollar was able to gain against the euro yesterday, but continues its slide against the yen. The Chicago Fed National Activity Index for September showed that economic expansion was continuing but below a trend pace. So bias in data remains for another slide for the dollar before changing our view for a more firm dollar. Global stock markets had a very interesting Monday, and not least because the basic materials sector, which has outperformed for several years, was the worst performer yesterday on a relative basis. On a relative basis, yesterday was the single worst performed day since mid-August, when the credit problems hit the market. Over the past year, weakness in basic materials has tended to coincide with a weak Aussie dollar. The Aussie fell sharply through the European session and early in New York, but made a solid comeback as stocks turned green, led by strong earnings, and recovered some of Friday's losses. Today's calendar is not that heavy, but at 9 GMT we have industrial new orders from the Eurozone sector expected at 0.9%. At 12:30, Canadian retail sales for August is out, and at 14, U.S. Richmond Fed Manufacturing Index is released, expected at 8. Upcoming highlights. Tomorrow we have Australian CPI, which is expected strong, and it will be important to see, interesting to see with the recent strong PPI figures. Also tomorrow, New Zealand official bank rate is expected to be kept at 8.25. Thursday, U.S. durable goods orders, jobless claims, and new home sales is released. Very important is the new home sales, as the American housing market has really been down at the moment, and we would like to see a confirmation that the slowdown is still intact. Also, Thursday is Swedish PPI, also very important for the Scandies. FX trade of today, we have a sales signal to go short dollar Swiss at 17.61 stop offer. We keep a stop at 17.79 bid, targeting 17.05. However, we recommend reducing position sizes due to the lack of direction at the market at the moment. Our equity trade of today is FTSE. We would like FTSE to close the gap from yesterday, as strong earnings and easing mortgage concerns in the U.S. Should help stocks go higher. We suggest buying on dips towards 64.45 to 40, with a stop below 64.35, targeting 6,500. Our future trade is crude oil. We actually have a trade to go long and short. We would like to buy on the break on 86.40 with a stop below 86. or sell below 85.40, targeting 84.75 and 80.30 area. Stop above 85.80. Helping this trade is the geopolitical risk between Turkey and Pakistan. Oil could trade much lower. That is on the sell signal. That is all for today. Thank you for listening.